All right, so today we're going to be taking a deep dive into Epack Durable Ltd,
Okay.
an Indian company that designs and manufactures air conditioners and also some smaller appliances. You
Interesting.
guys sent us their latest investor presentation, the press release for their Q3 FY25 results, and even some analyst questions from their recent earnings call.
Wow. That's a lot of material.
It is. So let's try to break it all down and figure out, what's really important, what we need to know.
Sounds good.
What I think is interesting here is that, Epack is more than just like a manufacturer.
Mm-hmm.
They're really navigating a rapidly changing market,
Mhm.
constantly innovating, expanding globally.
Yeah, it's a great example of how a company can kind of evolve and stay ahead.
Exactly. So before we get into like the nitty-gritty of their financials, let's just, start with the basics.
Sure.
What exactly is Epack Durable Ltd? What's their story?
Well, they've been around for like over 20 years now, founded in 2003,
Oh, wow.
and they started as a contract manufacturer.
Yeah.
So they were basically building products for other companies.
Got it.
But in 2012, they switched gears and became an original design manufacturer,
Okay.
or an ODM for short.
What does that mean?
It means they design the products themselves. A&D manufacture them.
So they have control over like the entire process
Exactly.
from concept to creation. That's cool.
Yeah, and it's been a winning formula for them.
Oh.
They've become like a major player in the Indian appliance market,
Mm-hmm.
specifically for what are called room air conditioners, or RACs.
RACs?
Yeah, they're actually the second largest RAC ODM in India,
Wow.
with almost a quarter of the market share.
That's huge.
It is.
And their financials reflect that success, right?
Oh, absolutely.
The investor presentation mentions some like pretty impressive growth numbers.
Yeah, their revenue has been growing at a compound annual growth rate of over 24% for the past few years.
That's incredible.
It is, and their client list is like a who's who of the appliance world.
Oh, really? Like who?
Voltas Hair, Philips, Godrej, Dakin Hovels, like the list just goes on and on.
Wow, so they're working with some really big names. Yeah, they are.
So clearly they're doing a lot of things right.
Mm-hmm.
But let's get down to it, like their Q3 FY25 financial results.
Okay.
What are the key takeaways here?
Well, revenue is still going up. It reached INR 3,768 million,
Okay.
which is a 35% increase year over year.
Wow. So strong demand for their products continues.
Yeah, it seems like it.
Okay, so the top line looks great,
Hmm.
but I did notice the press release also mentioned that EBITDA growth was a bit slower,
Yeah.
only 1.3% year over year.
Right.
What's going on there?
So that's where things get a little bit more nuanced.
Okay.
Epack recently opened up a brand new facility
Okay.
in Sri City, Andhra Pradesh.
Okay.
This is like a major investment for them,
Mm-hmm.
and it's impacting their margins a little bit in the short term
Why is that?
because it's not operating at full capacity yet.
Right, like any new facility, there's some ramp-up time
Exactly.
before it becomes fully efficient.
Precisely. But here's the silver lining.
Okay, what is it?
Quarter-over-quarter EBITDA growth was actually 150%. Wait a minute, so they're already seeing like significant improvement.
Yeah, they are.
Wow, that's amazing.
It is.
So some short-term pain, but potentially long-term gain.
Yeah.
Now, what about profits?
Okay.
The press release had some mixed numbers there, right?
Yes, so net profit for Q3 was down 49% year over year.
Okay.
But it's important to look at the bigger picture.
Okay.
For the first 9 months of FY25, their net profit actually jumped 132%
Oh, wow.
compared to the same period last year.
So they're still on track for a strong year overall,
It looks like it.
despite, that little dip in Q3.
Mm-hmm.
And it sounds like this Sri City plant is going to be really key moving forward.
Absolutely. Management expects it to reach a normalized capacity,
Okay.
utilization of about 50% by the end of this fiscal year.
So as that happens and they streamline production,
Yeah.
we should start to see the Sri City plant really, boosting their margins.
Yeah, in the coming quarters and years, for sure.
So a potential turning point for them. Now let's talk a little bit about their product segments.
Okay.
We know them for air conditioners, but they're also branching out, right?
Yes, the diversification is definitely part of their strategy.
Okay, so looking at their revenue for the first 9 months of FY25,
Mm-hmm.
77% came from RACs, 6% from component sales, and then 17% from small domestic appliances or SDAs and other products.
Okay.
So RACs are still their bread and butter,
Yeah.
but other areas are gaining traction.
Mm-hmm.
What exactly are they doing in the SDA and others category?
Oh, they're doing a lot.
Okay.
They showcased a whole bunch of things in the investor presentation.
Well, I remember that.
In addition to their existing stuff, like, the cooktops and the mixer grinders, They're expanding into larger appliances,
Like what?
like coolers and washing machines.
Wow. So they really are trying to become a one-stop shop for home appliances.
It seems that way, and they're not stopping there.
What else?
They're launching new SDA products like air fryers coming out in March.
Yeah.
And even more categories planned for like Q2 of FY26.
So diversifying within their segments too.
Exactly.
That's a smart move. But what about those component sales?
Okay.
6% seems pretty small right now.
It is, but they're aiming for 12 to 15% in the medium term.
Oh, wow. So they're really focusing on component sales.
There's a strategic reason for that.
Okay, I'm listening why the emphasis on components.
Well, sourcing components offers better margins
Okay.
and capacity utilization.
So compared to just assembling finished products.
Exactly.
So-
And they're also gaining some traction with major brands
Willie.
by supplying components like cross-flow fans and copper tubing parts.
So things that they have the expertise to manufacture in-house?
Exactly.
So they're leveraging their manufacturing capabilities to create like new revenue streams.
Yeah.
Very clever.
And speaking of clever moves, their partnership with Hisense is another interesting development.
Oh yeah, that was a big announcement.
Yeah.
What's the latest there?
So they're setting up a new subsidiary in Vietnam specifically to manufacture Hisense products.
Wow.
Construction's already underway.
So international expansion is in the cards too.
It is, and there's potential for Hisense to actually take up to a 26% stake
Oh wow.
in this subsidiary,
Okay.
pending, regulatory approvals, of course.
So this could be a very lucrative partnership for Epack.
It could be.
Okay, so we've got new facilities, product diversification, international expansion. What else are they doing strategically?
Well, let's not forget about the PLI scheme.
Oh, right, the Production Link Incentive Scheme.
Yeah,
Can you remind our listeners what that is and how it benefits Epack?
of course. So the PLI scheme is a government initiative
Okay.
to boost domestic manufacturing.
Right.
And Epack actually received 30 crore rupees under this scheme in FY24.
Wow.
And they expect a similar amount by March FY25.
Okay, so a nice little financial boost from the government.
Yeah, it is.
But I do recall the press release mentioned some supply chain challenges.
Yeah.
It hasn't all been smooth sailing, right?
Yeah. Unfortunately, no. There are disruptions in the copper supply,
Oh, right.
which is a key raw material for a lot of their products.
Yeah, copper's used in so many things.
Yeah, it impacted the entire industry in Q3.
So how did Epack handle that shortage?
They were granted GIS approvals,
Yeah.
which are general import authorizations,
Mm-hmm.
to source copper from overseas suppliers.
Okay, so they found a way to keep production going.
Yeah, for now.
Okay, that's good. And domestic copper tubing production is supposed to come online soon as well,
That's right.
which should further stabilize things.
Hopefully.
But there was something about potential compressor supply concerns, wasn't there?
Yes, there's a possibility of issues later this year
Okay.
because some suppliers need to renew their GIS certificates.
Oh, right.
And if those renewals don't happen...
Then it could disrupt the compressor supply chain.
Exactly.
Okay, so something to keep an eye on.
Yeah.
But overall, it seems like they're doing a pretty good job navigating these challenges.
Yeah, I think so.
So what are the key investor takeaways from these Q3 FY25 results?
Well, the biggest takeaway is that management is sticking to their revenue guidance of INR 2,150 million for FY25.
Okay.
So they're confident they can hit their targets.
Even with all the challenges.
Exactly. And their focus is on improving the Tri-City plant's utilization and profitability.
Which is going to be really crucial to their success.
Absolutely.
And their diversification strategy seems to be paying off.
Oh, yeah, absolutely.
They're continuing to grow in RACs, but they're also aggressively expanding into other segments,
Right.
making them more resilient to market fluctuations.
Exactly.
Plus, they've got those strong industry tailwinds and those government initiatives supporting demand.
Yeah, things like the PLI scheme.
Right. So all of this suggests that Epack is well positioned for continued growth.
I think so.
They're leveraging their ODM expertise,
Mm-hmm.
their diversification strategy, and their focus on operational efficiency.
Yeah, to really navigate this dynamic market.
It's a pretty fascinating story of growth and adaptation.
It is.
But before we dive into the analyst questions,
Okay.
there was one more point from the investor presentation that I thought was really interesting.
So what was that?
Their commitment to R&D.
Oh, yeah?
They have 4 dedicated R&D centers with over 70 full-time employees.
Wow.
They're not just like following trends, they're actively innovating and pushing the boundaries.
Yeah, that's a great point.
And they're vertically integrated,
Oh, yeah.
meaning they manufacture many of their own components.
Right.
So that gives them even more control over quality and costs.
Which is a huge advantage in a competitive market like India.
So they're not just playing the game, they're changing the rules.
They are.
Now let's dig into some of those questions that analysts and investors posed during Epack's earnings call.
All right, this is where we get some really granular insights.
Exactly. Let's see what we can uncover.
Let's do it.
First up, a lot of questions about the electricity plant and its impact on margins.
Yeah, makes sense.
One analyst asked about the timeline for, getting things normalized at the plant and how they see margins panning out for the full fiscal year.
They were really digging for specifics on those short-term costs versus the long-term gains, but Epack's management addressed this head-on.
Okay, good.
They reaffirmed their previous guidance,
Okay.
stating that EBITDA margins for FY25 should land in the 7.25 to 7.5 range.
So a slight dip now,
Yeah.
but they're confident in a rebound as electricity gets up to speed.
Right. They made it very clear that the Strict plant, once it's fully normalized, will be instrumental in driving even better margins in the coming years.
Patience is key.
Yeah.
Another hot topic was the Hisense partnership.
Of course.
Analysts were eager to hear more about the products slated for manufacturing
Right.
and the production roadmap.
It's a smart question because this partnership has the potential to be a game changer,
For sure.
and they didn't disappoint with the details.
Okay, good. What do they say?
They confirmed that the new facility in Vietnam is already under construction, and they're targeting to begin producing Hisense air conditioners by Q3 of next fiscal year, so around August or September 2025.
That's a fast turnaround.
It is.
What about those other appliances they mentioned, like washing machines?
Washing machines are actually ahead of schedule.
Really?
They're in the final testing phase and expect to start mass production in Q2 of next fiscal year.
So that's exciting news.
It is.
And it sounds like this partnership might expand even further, down the line.
Yeah, there was some discussion about potentially adding refrigerators to the mix.
Oh, well.
But that's further out, maybe in a couple of years.
Okay.
We'll have to wait and see.
So a long-term partnership with lots of possibilities.
Yeah.
Now, remember how we were talking about Epack's diversification strategy? Analysts were really keen to understand how they're progressing with reducing the reliance on RACs.
Yeah, it was a recurring theme.
Okay.
One analyst pointed out that one of Epack's competitors had posted really strong RAC revenue growth and wanted to understand why Epack's growth was comparatively lower this quarter.
Right. Was it just the copper supply chain issue we talked about earlier?
That definitely played a role.
Okay.
But Epack's management highlighted that they've already exceeded their total RAC revenue from the previous fiscal year.
Okay.
So they're still on track to hit their overall revenue target of INR 2,150 million for FY25.
So they're not sweating one quarter's results.
No.
They're focused on the bigger picture.
Exactly. They're confident in their growth trajectory and their ability to handle those short-term challenges. And remember, they're intentionally diversifying to reduce their dependence on RACs even as they continue to grow in that market.
It's all about balanced growth.
Precisely.
Not just for growth's sake.
Right. There were also some questions about their working capital and inventory management,
Okay.
particularly because they had mentioned not discounting their trade receivables in the previous quarter.
That's a good point. What did they say about that this time around?
So Epack's CFO explained that they were keeping their working capital requirements at around INR 350 crores.
Okay.
And they also indicated they might need to do some bill discounting in Q4.
Which is their peak season.
Exactly. To handle that increased demand.
Makes sense. So they're being proactive and planning for that busy season.
Yes. And they were very clear that they don't need to raise any additional debt right now
Okay, good.
to finance their operations or their expansion plans.
Okay. That's reassuring they're managing their finances well.
It seems like it.
Now, there were also a few questions about the PLI scheme
Mm-hmm.
and how much they expect to receive this year.
One analyst inquired about their receivables under the PLI scheme,
Okay.
and Epack confirmed they anticipate receiving about INR 30 crores by the end of March.
Similar to last year.
Exactly. They've already accrued INR 27 crores during the first 9 months of this fiscal year.
Okay, so the PLI scheme is providing a significant financial cushion.
Without a doubt.
And remember those compressor supply chain concerns we discussed? An analyst asked if those issues had been resolved or if further disruptions are anticipated.
So Epack acknowledged that supply chain disruptions, particularly the copper shortage, did impact the industry last quarter. However, they explained that securing those GIS approvals for overseas suppliers had eased the copper shortage for now.
Okay, so they found a workaround for the copper issue for the time being.
Yeah.
What about compressors?
They said that while the copper situation has stabilized, there are still potential compressor supply concerns later this year.
Because of those GIS certificate renewals.
Exactly. If those renewals aren't granted, it could disrupt the supply chain.
Right. And they also mentioned those short-term shortages last quarter because Chinese manufacturers were prioritizing exports to the U.S.
Yeah, the U.S. is a huge market.
But it sounds like they're optimistic about the long-term compressor supply outlook.
They believe that domestic manufacturing capacity will increase in the coming year,
Okay.
which will reduce their reliance on imports. They even highlighted new compressor manufacturing plants being set up in India
Oh, wow.
by companies like Daikin and LG.
So a more localized and stable supply chain in the future.
Hopefully.
Now let's talk about their component sales business.
Okay.
Analysts were really interested in how that segment is performing and their plans for scaling it up.
It's another area where they're seeing some really positive results. They shared that component sales currently contribute about 6% of their total revenue,
Okay.
but are projected to reach 12 to 15% in the medium term.
That's pretty ambitious. What's driving that growth?
Strong demand from brands.
Okay, for what kinds of components?
Things like cross-flow fans, copper tubing parts, and controllers.
Okay, and Epack can manufacture these in-house at a pretty competitive cost, right?
They can, which makes them a really attractive supplier.
So they're capitalizing on both their manufacturing capabilities and those strong relationships with the big brands.
Exactly. And they also pointed out that component sales typically have better margins and capacity utilization than finished goods.
So it's a strategically important segment for them.
Is.
It sounds like they're positioning themselves to become a real force in the component supply market.
Yeah, I think so.
What about their export business?
So they acknowledge that their export business is still relatively small,
Okay.
but they are seeing strong growth, particularly in the AC segment.
Okay.
They've already doubled their export revenue this fiscal year.
Wow, that's impressive.
It is.
What's fueling that growth?
They attribute it to their cost leadership.
Which is thanks to their in-house manufacturing, right?
Exactly, which gives them an edge in the global market.
And they anticipate continued export growth in the years to come.
Yeah, it sounds like it.
They're really making their presence known on the international stage.
They are.
Now, there was one question I thought was particularly insightful.
Oh, yeah. What was it?
An analyst asked about the potential for their existing RAC manufacturing lines to be used for producing components for washing machines or other appliances.
That's a clever question, really gets to the heart of their flexible manufacturing strategy.
What was their response?
They confirmed that they are exploring using existing lines to produce components for other appliances.
Okay.
And they emphasized that this flexibility is a key advantage as a contract manufacturer.
Because it allows them to adjust to shifting market demands.
Exactly.
And optimize capacity utilization.
Right. A very smart approach, especially in the ever-changing world of consumer durables.
Now, before we wrap up this part, let's circle back to Epack's commitment to R&D.
There are 4 dedicated R&D centers and early adoption of new technologies.
Yeah, it really speaks volumes about their long-term vision and dedication to innovation.
I agree. It sets them apart from a lot of other contract manufacturers.
They're not content with simply being a behind-the-scenes manufacturer. They're investing in R&D to stay ahead of the curve.
A key ingredient for sustainable growth. Now, before we move on to our final takeaways for the listener, I do want to highlight one more detail that emerged from the earnings call.
So they're setting up shop in Dubai.
Oh, wow, in Dubai.
Yeah, they're establishing a wholly owned subsidiary there.
Interesting. I didn't see that in the investor presentation.
It came up during the Q&A.
Oh, okay.
And it sounds like they're mainly aiming to expand their global sales and distribution network.
Makes sense using Dubai as like a hub
Exactly.
to reach those new markets in the Middle East and Africa. Smart move. Dubai is a major trading center.
Wow.
Great logistics connections to lots of those, fast-growing markets.
And remember, we were talking about them potentially becoming a household name.
Yeah.
This move to Dubai could be a step in that direction.
I see what you mean. It could really boost their brand visibility.
Exactly, in a whole new region.
Yeah, if they find success in Dubai, who knows what other doors might open up.
Exactly. Okay, so we've covered a ton of ground here.
We have it.
From Epack's financial performance and growth strategy to the challenges and opportunities they face. What does it all mean for you, the listener?
Well, I think the first thing is that Epack Durable Ltd. Is not standing still.
They're not.
They're operating in a rapidly growing market, but they're not just riding the wave.
Right.
They're actively shaping their future.
With all these bold moves, new facilities, new products, new partnerships.
Exactly. They're playing the long game, making these strategic decisions.
For sustained growth.
Yeah, and their commitment to R&D really sets them apart.
Hmm.
I mean, they're designing and manufacturing, not just assembling.
Right, giving them more control over quality and costs than a lot of their competitors.
For sure.
But they're not immune to those market realities, like those supply chain disruptions and rising costs.
Absolutely. Those are real challenges.
But it seems like they're managing them pretty effectively.
I think so. They're finding ways to, secure alternative sources of supply, optimize their production, leverage those government programs like the PLI scheme
Right.
to minimize the impact on their margins.
They're demonstrating resilience and adaptability.
Exactly. And that's what makes them so interesting. I mean,
Right.
they're ambitious, they're innovative, and they're executing their strategy well.
So the big question is, can they break out from being a behind-the-scenes manufacturer and become a household name?
That's the million-dollar question.
Right.
Only time will tell.
But they're certainly making the right moves to get there.
I think so.
They have the potential to be a global leader in consumer durables.
Yeah. It'll be fascinating to see what they achieve as they continue to grow and evolve.
Definitely a company worth keeping on your radar.
Agreed.
So there you have it, your deep dive into Epack Durable Ltd.
We explored their financials, their strategy, their outlook.
Now it's up to you to decide what it all means for you.
As always, do your own research, consider your investment goals.
And make informed decisions.
Exactly. And remember, there's always more to learn.
Till next time, happy investing.